Good day, Doctor, and my fellow friends. My name is Wang XIN, and today I'll be sharing a reflection on one of the most infamous creative accounting scandals in corporate history, the Transmile Group Berhad. Transmile was a Malaysian air cargo company listed on Bursa Malaysia that gained popularity in the early 2000s, attracting big-name investors like Tyco Robocorp and even foreign companies and government such as Goldman Sachs and Singapore government. The company was a specialist in aircraft engineering and line maintenance services. However, the company overstayed its revenue by 530 million ringgit from 2004 to 2006 in their financial report. This was done by recording fictitious sales using fake invoices, creating an illusion of higher earning that never happened, where in fact the company was facing financial losses. The truth surfaced in 2007 when external auditors refused to sign off the financial statements due to irregularities. Besides that, a special audit confirmed that Transmile revenue was fraudulently inflated. The fallout was significant. Three former executives was charged under the Securities Commission Act and resigned from the company. In 2023, the former CEO was fined with 2.5 million ringgit and sentenced 1 day of imprisonment. The company also suffered significant losses. For instance, the company share plummeted as investors lost confidence in the company and the company struggled to recover from the scandal. Eventually, in 2010, Transmile was classified under Note 17 for financial distress companies and was delisted from Bursa Malaysia in 2011. In my opinion, this is a serious case of financial misrepresentation that happened in a well regulated market. The scandal reflects a failure of ethical leadership, where management feel intense pressure to perform financially, compromise their integrity due to lack of strong ethical foundation. It also shows how accounting fraud could severely damage the company reputation as public investors lose confidence as a result of misleading financial information. The Transmart Group Berhad cases raised several critical ethical issues fundamental to the accounting profession. Specifically, when the management intentionally misleads stakeholders by fabricating revenue figures, thereby violating the core principles of integrity, transparency, and accountability that is expected of all financial reporting. This incident highlights the importance of prioritizing the interests of investors and upholding professional ethics over short-term financial interests. Moreover, the fallout from Transmart misconduct had far-reaching consequences, impacting not only the individual directly involved but also damaging the reputation of the accounting profession and the trust placed in auditors. Now, I would like to share my reflection on the financial statement analysis course. One of the most significant concepts I have learned in this course is the importance of financial accounting principles and how they serve both internal and external users. Previously, I had a general idea of financial statement, but this course helped me understand their true value. I now see how financial data guides internal decision makers like management and also inform external users such as investors and creditors about the company financial position. Another valuable tool I gained is the use of Excel for financial analysis. Through practical assignments, I learned how to extract and interpret the data from financial statement and calculate the profitability, liquidity, solvency, efficiency, and even market value. This really transformed the way I view a company performance. I now understand how data analysis can help determine if a company is worth investing in. I also explored the impact of creative accounting. It made me aware that numbers can sometimes be manipulated to to present a healthier financial position than reality. However, this journey wasn't without challenges. As a beginner, I initially struggled with understanding the key terms used in financial reports. Coming from a food science background, the technical language felt overwhelming. Luckily, I had a patient and supportive lecturer, and discussion with my classmates helped a lot. Collaborating with classmates made the process more manageable and also built strong teamwork skills. Another challenge was using Excel formula. I had limited experience, especially when it came to insert and using the correct function. But through online tutorials and practice, I gradually became more confident. Moreover, leading a team during group assignments also came with its own set of difficulties. Some members were less cooperative at times, but I learned to overcome this by setting clear goals, breaking tasks into smaller deadlines, initiating regular meetings, and being firm about their responsibilities. This experience strengthened my leadership and communication skills. Into the real world, I now feel much better equipped to analyze company performance using actual annual reports. I can apply financial ratio to assess which companies are performing well and which may pose a risk to investor. Personally, this will help me make informed decisions when it comes to investing or even managing a business in the future. It's all about interpreting the meaning that numbers represent for the business and its stakeholders. Most importantly, this course has reshaped my perspective on the importance of accounting numbers in financial decision making. Financial report communicates the story of a business, whether it's management planning for the future or investor deciding where to place their fund. Accurate financial data is critical. A single misjudgment or a misrepresented number can have serious consequences to both external and internal users. To conclude, the financial statement analysis course has been an insightful journey from mastering Excel tool to understanding the strategic value of financial information. I now see how accounting is a powerful decision making tool. I look forward to apply these skills and continuing to grow in this field. Thank you.